Welcome to the channel. Thank you for watching. If you are new to the channel, we appreciate you clicking. If you've been here before, thank you for coming back again. We're always here dropping videos weekly, making sure we can pass on any knowledge and educational material regarding stock market trading and stock market investing. So with that being said, let's dive right into the video. The simple strategy to use when it comes to being a beginner trader. What can you look for on the chart that will help you grow your small account, help you gain some confidence, be a little consistent? We all know, or at least should know, that the main goal as a beginner trader is to just stay in the game. Don't blow your account. Don't do things that are out of character. Have great risk reward, great risk management. I like to call it just like mental toughness when it comes to the stock market. And I say mental toughness because it can get hard to control your emotions. Using these simple patterns I'm going to show on the screen and everything, and something that will set beginner traders up for success. Okay, so let's go ahead and get into the video. Now, the beginner plan is to use support, resistance, and bottom curl. If you can just do that, that will help you grow your small account, especially if you could be patient enough to just wait and let the play come to you. So like I said, support, resistance, and bottom curl. Let's start off with the definition of each, okay? So support is, let's say, level that the stock does not fall below for a medium or long period of time. Okay, at this level you can see potential bounce opportunities. There we go, bounce opportunities. We can see, oh wait, did I not spell that right? Oops, sorry. All right, bounce opportunities. We can see, I call it fall through. And that's just saying that whatever that level is, it just basically falls right through it, which can be a bearish sign. At the support level, you can see a bounce opportunity. It can fall through, but what you're looking for, looking for a hold and a curl with confirmation. All right, that's what you're looking for at the support level. The next definition is resistance. All right, now resistance is the exact opposite. It's the level that, sorry, not the best typer. It's the level that the stock has a hard time getting and holding above. So getting to, that's what I'll say, and holding above. At this level, we will look for, I would just say reactions, okay? Because it will bounce down, but we really want it to bounce above and hold. Okay, but usually we are in the play before it even touches resistance, and you want to sell into momentum. So let's write that down. Sell into momentum. Meaning, if you have a small account and you know that there's a big level that's hard for the stock to get past, do not hold it all the way to that level. If you are green, take the profit. Okay, just take the profit. Because what happens, and I'll show an example, what happens if it gets to that level and it just shatters to the ground? Now you lost all of your money. So sell into momentum. You want to see how it reacts at the top. And to help you out, usually it fails. Usually the resistance, it will fail. Now the key is, how hard does it fail? Okay. Does it fall 50% back as a retracement, or does it just fall 15% and it holds and then it curls, and now it's retesting that resistance again and again and again, and then it's like, all right, it may get through, but usually it fails and you will see some type of retracement. Now the last part is bottom curl. Curl is our confirmation, along with the volume of the curl. But that's something we can talk about on a different day in a different video. These are the definitions here. So let's go ahead and take it to the chart. For the example, we're going to go with BABA. So the first thing I want to do when I'm looking for support and resistance is I like to scale out first before I go intraday. So right now we are looking at the 180-day 4-hour chart. If you look at this, okay, I kind of already wrote this stuff in, but we have a support level, which is the bottom level that it usually holds above, and we want to wait for that reaction that goes after it touches the support or comes down and retests the support. Now, I have two. The reason being is because of the time frame. This one here is like the absolute bottom. You can stretch this out. You can stretch this out as much as you want. This is the absolute bottom. If it touches this, we're going back to 218, 220. That's a bad sign. But the second one is the one that most people will probably go off of, especially, I know that the chart is longer now, but at the time, looking at just this part here, this was a great spot to see what the support is. And this is my such a good example, actually, now that I'm looking at it, because this shows what I was talking about selling into momentum. Because this top part here, this top level is the what? Resistance, right? It comes up, touched resistance, fell to the bottom. Went up again, touched resistance, fell to the bottom. Went up a third time, touched resistance, failed, hit the bottom. Then it went, touched resistance, popped and held. Like I mentioned before, you sell into the momentum. You don't hold when it is like retesting the resistance. But when you see that it goes past, then you wait for the hold, you buy back in, and it pops. Simple as A, B, C. Now, looking for the reactions, okay? This is the reaction. Touch the top. Now, when it found its bottom, a lot of people were probably nervous around, this area, or when it came all the way back down and touched 239. But if you are looking at the chart and, recognizing what it's doing, you just go in here, you look for your support, you look for your resistance, and you see, all right, well, as long as it stays above 238, 239, I should be fine to re-enter that play. So what you do is you wait for the confirmation. Now, Eugene, what is the confirmation? Let me show you. Here, and the confirmation is there. And then you know what? Let's do one more. I'm going to duplicate this. Confirmation is here. So this is what I mean when I say you wait for the curl, and then you wait for the curl, and then you purchase and you sell the pop. You sell into the momentum. You take the profit. Okay, because the curl came down. This is the curl, the U. By the time that it touched here, right? And I will say the gray marks, just so you know, are pre-market or aftermarket. Let's zoom in first, because this will make total sense if I just zoom in. This is the curl. This is the curl. Came down. Touch the support. This was in pre-market, so you were not trading. But what you did see is that after this pop, it did what? It held. After this pop here, it held right there. I'm gonna actually change the color to make this a little bit easier for you. Let's make it yellow. After the pop, it held. So what did I say we're looking for? Resistance, support, confirmation. Here goes our U. It popped, it held, it didn't come back lower. So this was a great day to buy. The next day, even though it opened with a red candle, you sell at the open. Don't let it touch resistance because it already did in pre-market. So that would have been a red flag to make sure you sell at open. You bought it here, you sell the pop, sell into the momentum. And what did it do? Came right back down and did the same thing again. Like I mentioned before, support, resistance, watch the bottom curl, make the play. With that being said, I appreciate you for watching. That's just one example, but you can go through many examples on whatever platform that you use. I will always recommend Thinkorswim, E-Trade, or Webull, Robinhood. If you are a beginner trader, it is a great beginner platform. But regardless, with Webull and Robinhood, if you want to get a free stock, feel free to click the link in the bio. If this video has helped you out in any way, smash the like button, subscribe to the channel. Stay tuned, and I hope to see everyone here on our next video. Peace.